Good afternoon, sir. I can hear you.
Can hear you, sir.
Okay, good. So you're welcome to another class. And today we are going to majorly solve questions on these two parts of complex group to show how we would consolidate more than one subsidiaries. That's basically what we'll do today. Then I'll just allow you to revise that. Then on Wednesday, hoping that you will have revised what we did today, so you will have gotten used to the process. Then we can then move straight into piecemeal acquisition and disposal of a subsidiary. Then finally would finalize with foreign subsidiary and cash flows. Then we'll be done with a consolidation. Then we can progress to past questions. So today, we're looking at where a parent acquires equity interests in more than one subsidiaries, or where a parent acquires equity interests in a subsidiary, and that same subsidiary acquires equity interest in another subsidiary, which is basically what we majorly find in exams, where we have a subsidiary. When the parent wants to consolidate or prepare consolidated financial statements, you need to determine the effective holding of the parent and the NCI in the subsidiary. Because the effective holding of the parent in his own direct subsidiary is always very clear. But what is not clear is his holding in the subsidiary. So we would need to solve questions on those ones today. Now, let's use this question to apply those explanations. Hopefully, we'll be able to solve these three questions today. Now, the first question says that they give us the statement of financial position of PICO, ESCO, and SSCO on 31st March 2017. So PICO, ESCO, SSCO. And from this statement of financial position, what I usually look out for is the investments the parent has made and also all the other entities have made. You will see here that in the books of the parent, he has obviously invested 60,000 in ESCO. And also, in the book of the subsidiary, he has incurred or invested 55,000 in SSCO. However, when we want to do cancellation, because that means when we want to consolidate, we need to cancel out. We only cancel out transaction of PICO against the others. It's really none of our business what has happened between ESCO and SSCO. We will just take whatever it is that is our portion in that transaction. So let's see how that cancellation will work. However, before then, PICO acquired its shares in ESCO on 1st April 2013, where the reserve of ESCO stood at 20,000. And ESCO acquired its shares in SSCO on 1st April 2014, when the reserves of SSCO stood at 25,000. We're now told that it's a good policy to measure NCI at acquisition at its proportionate share of the fair value of the subsidiary's net asset. You are now required to prepare a statement of financial position of PICO at 31st March 2017. Okay. Now, the first thing we need to do, like I mentioned, because here The only intra-group transactions happening here is just the investment. It's just the investment that Pico made in ESCO and also ESCO made in SSCO. So, of course, to cancel our transactions between Pico and ESCO, I've shown you from the revision I did with you. However, for SSCO coming into the picture, Pico does not have any holding in SSCO directly, but it has an indirect holding in SSCO by virtue of his holding in ESCO. And on that basis, we will need to find how we want to consolidate SSCO based on Pico's holding or based on Pico's indirect holding in SSCO. So the first thing we need to identify is that it's for me to establish the group structure first. Let me make it very clear. Here is important, the group structure is established. And here now, we have Pico. I'm told that Pico acquired his interest in SSCO. He acquired how many percent? I was not told, but I can calculate it. And the way to do it is that Pico acquired 40,000 shares in SSCO, in ESCO. And given that the value of share capital of ESCO is 50,000 and he only has one naira nominal value, that means his shares is 40,000. His shares is 50,000. So for this other guy, Pico, he acquired 40,000 out of the 50,000 shares that this guy has. So we are looking at something around 40 over 50 shares, which will give us how many percent? Please,
80%. 80%.
thank you, which is 80%. So Pico has 80% in ESCO. And I was also told that ESCO also acquired, at least from what I can see here, ESCO acquired 30,000 shares in SSCO. And SSCO has 50,000 shares. So again, ESCO in SSCO was his holding. That will be 30. What does that give us?
60%.
He has 60% in SSCO. Now, having identified this group structure, for me to consolidate or prepare consolidated financial statements in Pico, I would identify my holding in ESCO, which is very clear. And the parent needs to also identify his holding in SSCO. So I will need to get effective interest of Pico in SSCO, and which is 80% of anything ESCO has in SSCO, which is of 60%. And that will give me what? 48%. That will give me
48%.
And if the parent has 48% in SSCO, so non-controlling interest in SSCO is simply 100% minus what? 48%. And
52%.
that 52%. You see, as soon as we're able to correctly identify this effective holding, then we have done a major part of the work. We have done a major part of the work because it is on that basis that you are then going to have to consolidate SSCO in the consolidated account. Now, having sorted that out, I can then go ahead and consolidate. The first is for me to do my cancellation, to cancel out all similar transactions should be canceled out. And usually when you cancel out, it results in what we call goodwill. Now, in this case now, you do the goodwill or cancellation systematically between PICO in ESCO and also PICO in SSCO. PICO in ESCO and PICO in SSCO. Somebody is saying that, where did I find 40/50? I was trying to determine the holding of the parent in ESCO. The question didn't give me that directly, but I can see that the parent acquired 40,000 shares in ESCO, and ESCO has 50,000 shares. So this 50,000, if I divide it by the nominal value of €1, it gives me 50,000 shares. So 40,000 all upon 50,000 gives me the 80%. The same thing applies to getting the holding ESCO has in SSCO. ESCO acquired 30,000 shares in SSCO, and SSCO has 50,000 shares. And that was how I also did this as well. Now, back to cancellation. I will need to identify the consideration transferred, because that's what I want to cancel out against the equity of the investee. How much did the parent pay to acquire his 80% holding in the subsidiary? I was given in the statement of financial position as 60,000. So I have 60,000 here. Also, how much did the parents pay to get 48% holding in SSCO? Let me allow you guys to contribute to that. Let's think about that together. Let's see if we can figure that out together. How much the parent will have paid to get 48% holding in SSCO?
I think it's 26,400.
26,400. How did you get that?
48% of 55,000 naira.
That's impressive, Tony. That's a good attempt. So Tony looked at it and said that since ESCO paid 55,000 to SSCO, and we're able to determine our effective holding in SSCO to be 48%, then the parent must have paid must have borne 48% of these 55,000 that ESCO paid. Is there anybody that don't agree with that answer? Yakub does not agree. Let's hear you.
Yeah, I would not agree, because the total payment that ESCO paid in SSCO is 55,000, irrespective of the percentage of holding. But what the parent is holding on ESCO is just 80%. So it will be 80% of 55,000. That will be what the parent has paid out of that.
And that is the correct answer. And that is the correct answer. That's the correct position. Because ESCO paid 55,000 to SSCO. And anything that ESCO has, any costs that ESCO incurs, that ESCO makes, PICO has 80% of it. Since we are speaking about ESCO here, that we are trying to identify for this 80% holding this guy has, how much did he pay? Is 80% of what the subsidiary paid. He incurred 80% of it since he has 80% holding in ESCO. So Jakub is perfectly correct. This is 80% times 55,000. So what are we looking at?
44,000.
44,000. Now, having sorted that out, what's the non-controlling interest? How is it measured? The non-controlling interest is measured at proportionate share of the fair value of the subsidiary net asset. So we can wait for us to determine the net asset acquired. Then we can determine my non-controlling interest. And my net asset acquired will comprise my ordinary share capital. My ordinary share capital. And my ordinary share capital of the subsidiary, how much is it? That's 50,000 of the subsidiary. And the sub-subsidiary is also 50,000. Then the pre-acquisition retained earnings. What's the pre-acquisition retained earnings of the subsidiary? We acquired the subsidiary in April 2013 when the reserve of the subsidiary stood at how much? 20,000. That means the pre-acquisition retained earnings of the subsidiary is 20,000. So I have 20,000. What's the pre-acquisition retained earnings of SSCO? So ESCO acquired SSCO on April 2014 when the reserves of SSCO stood at 25,000. So SSCO has 25,000.
So please, I have a question before you move forward. I think someone has a question now, or which is also my question. Hello?
Okay, Anthony, let me check.
Okay.
Okay. So Sagat is asking, why did we calculate 48% if we are using 80? Okay, you said that's your question too, or you want to add something?
Yes, that's my question. And what about my second question is about what are we going to do with the NCI of the SS school? Because I didn't see you talking about it, and also what's the use of the 48%? Thank you.
All right, no problem. Okay, so I don't know how to put this to you. I will get to NCI since it's still blank, since it's calculated at proportionate share, so definitely that will be sorted. But saying that, okay, why did we then calculate this if we are using this? I don't think you should approach a question that way. I think we should approach a question like, I understand what we have done. I don't understand what they have done. I think you should look at it first because we'll definitely use it. But what we have done so far, does it make sense to you? Right? Does it make sense to you? If it makes
Yes.
sense to you, then you
Yes.
will understand where this will be effective. That's how I want you to look at it. So everything is going to make sense. I'm just starting. So what I really need you to understand, like the way Jacob explained, for this payment, for this consideration transferred, the principle is simple. We paid, in fact, ESCO paid 55,000 to SSCO. Since ESCO pays 55,000 to SSCO, and it's not ESCO that is consolidating, it's PICO. And we know that in SSCO, PICO has 48% in SSCO. But PICO didn't pay to SSCO. PICO did not pay. So it was ESCO that paid 55,000 to SSCO. So out of that 55,000, my own holding in SSCO, the parent's payment portion in SSCO is not 48%, is 80%. Is when I'm dealing with SSCO directly, not when I'm passing through ESCO. Okay, ESCO, then SSCO. ESCO paid 85,000. The parent's payment out of that 55,000 is 80% because the parent has 80% in SSCO, in ESCO. That is what I've explained so far. That is what I want you to understand. I can't explain what we're going to be using this one to do when I've not gotten there. When I get there, you will see. So, and that's the net asset acquired for this. Then, if I add these two together, it gives me 70,000. And if I add these two together as well, it gives me 75,000. Now, let's go back to NCI. Now, what's NCI holding in ESCO? Since the parent has 20% in ESCO, that means NCI has how many percent?
20%.
20%. So what's 20% of, that should be 14,000, right?
Correct, sir. 14,000.
Yes.
Okay, so the addition of the two gives me 74,000. Now, what's NCI in SSCO? What's NCI value in SSCO?
52%.
52%, sir.
52%. Okay. Let me be an advocate for Toy. Why are we not using 40%?
Is it 40% or 48%, sir?
Me 20%. Why are we not using 20%?
Yes,
That's
yes, I mean 20%. Yes, yes. Why are we not using 20%? Since we use 80%, yeah, why are you not using 20% here?
So anybody can answer.
Sorry, what did you say?
Anybody can answer when you're asking a particular person.
No, anybody can answer. Anybody.
Okay, we're using 52% because PICO is consolidating for SSCO and ESCO. So the NCI in SSCO is 52%.
Okay, that's more like it. But additionally, this one, the basis, this one is clear. This is consideration transferred. What the parent has paid in each of them. Here the parent paid 60,000 for ESCO. Here the parent paid 80% of whatever ESCO paid because it was ESCO that actually paid to SSCO. However, the idea behind this NCI here is just to actually get the value of NCI. It's not really so much for cancellation per se, it's just to have the value. And NCI value in ESCO is 20%. 20% in ESCO. That's the NCI value in ESCO. Since we are doing proportionate share, so 20% of the net asset of ESCO. NCI holding in SSCO, to get the NCI value, NCI has 52%. It has 52% because the intention of here is to inadvertently calculate the NCI value, just so that, okay, yes, we are comparing 100% with 100% here. So this has to be the NCI's holding in SSCO, because what this 14 means is NCI value, which could either be based on proportionate share or which could either be based on fair value. Here, the question says proportionate share. So the basis has to be 52% because that's NCI holding in SSCO. It's different from this. It's different from how much we paid. How much we paid to get 48% in SSCO. This is NCI value. We want to get the value of NCI here. So 52% of this net assets, which is 75,000. So how much does that give us?
39,000.
39,000. So what's the addition of the two? What's 39,000 plus 44,000?
83,000.
50 what?
83,000.
Okay, 83. Okay, let me just see if I can cancel this and call this 74. Okay, so the combined value of what the parent paid and NCI value is 74 in ESCO, and the net asset acquired in ESCO is 70. The combined value of what the parent paid and NCI value in SSCO is 83, and the net asset is 75. So what is the goodwill? This is 4,000, and this is how much? 8,000. So the collective goodwill is how much? Is 12,000. Because you cannot have two goodwill. We will ultimately combine the two together. So in the consolidated account would have 12,000. The third one is the consolidated retained earnings. And why I'm doing this consolidated retained earnings is just so that when I want to add these three together, I would have cancelled out all the pre. I will have removed because the pre has been cancelled out. So let me do my working so that it's easy. You cannot, ordinarily, I will not just do workings, I will just add them together. But since I'm only going to consolidate the post, the pre has been cancelled out here. We have cancelled out all these pre-acquisition retained earnings. So I think I've explained that before. So we have, in this case, we have PICO, we have ESCO, and we have SSCO. So as per the question, what's the retained earnings of PICO? 97.5. This 97,500. What's the retained earnings of ESCO? This
85,000.
85,000. And what is the retained earnings of SSCO?
7,500.
7,500. So I can then easily take out what I've cancelled out. Pre-acquisition retained earnings. For ESCO, its pre was 20, SSCO is 25. So we have 20 and we have 25. Then I'm left with post-acquisition retained earnings. Post-acquisition retained earnings. Here is 65. And how much do we have here? Is this correct?
It's correct, sir. 32,500.
Now let's get the group share. What's P code going to share in ESCO? And what's the group going to get in SSCO? Now, what's group's holding in ESCO? Who can tell me what's the group's holding in ESCO?
80%.
It is 80%, sir.
So the group is going to get 80% of 65,000. What does that give us?
52,000.
52,000. And what's the group going to get in SSCO?
48%.
Correct. Of 32,000. So this is where the 48% then is applicable.
15,600. 15,600.
600. So what's the consolidated retained earnings?
$67,600.
Plus this 97,005.
Okay, 165,100.
16,000.
165,100.
165,100.
Okay. Number 4 is non-controlling interest. What's the value of NCI? So we have ESCO and SSCO. So value of NCI as per above. In ESCO, what's the value of NCI? 14,000. In SSCO, what's the value of NCI? 39,000. So we are looking at 14,000 and we are looking at 39,000. So let's get the NCI share in ESCO and in SSCO. So in ESCO, NCI will get 20% of the retained earnings of ESCO, which is 65,000. So what does that give us?
13,000.
And in SSCO, NCI will get how many percent? 52% times this post-acquisition retained earnings.
16,900.
You said
16,900.
16,900. Now, this should be all, right? This should be all. But there's one thing we must do that if you don't do, your account will never balance, which is the fact that for us to ultimately get the value of NCI, we also need to get what the NCI has suffered in investing in SSCO. We did not consider it because there hadn't been opportunity for that. Considering this PICO in SSCO, we said parents paid 80% of whatever ESCO paid. So effectively, the parent paid 44,000 of what ESCO paid. Who do you think will pay the remaining 20%? Is NCI. That has to be reflected, otherwise the accounts will never balance. Because we have 55,000 in the account, you use 44. Your account will not balance. So if a parent paid 80% of what ESCO paid in SSCO, constituting the fact that yes, the parent actually paid 44,000 to have his holding in SSCO, who paid the remaining 20%? Is NCI. So what's our cost of investment in ESCO? What's our cost of investment? Is 20%, said in ESCO, in SSCO, is 20% of 55,000. What would that give us?
11,000.
Now, this 11,000, it doesn't really matter though. It doesn't affect whatever happens. But let me just ask you, this 11,000, are we going to effect it under ESCO or under SSCO?
Under ESCO, sir.
Why?
Because it is the cost of investing in SSCO, the cost. So who's paying the cost is ESCO.
Okay. So since it's as a result of what ESCO invested, it was ESCO that invested, so it's going to impact our value in ESCO, not in SSCO. It's our value in ESCO that
Yes,
we
sir.
have
I
incurred.
said in ESCO. That's what I said, sir, not SSCO.
Oh, yes, you are correct. That's correct. So it is in ESCO. That's perfectly correct. So it's the 11,000 will impact ESCO because it was ESCO that paid the 55,000. Out of that 55,000, we, NCI, incurs 11,000. It will affect our value in NCI. So is it going to go up or come down? Is it going to come in as an addition or a deduction here?
What's the question again, sir? Sorry.
This 11,000, will it be added to these other items or deducted?
Deducted.
Why?
We are trying to cancel out the investment in SSP.
Anyway,
No, sir. It will add to it. It will add.
why?
And because it's part of what NCI suffered. No. It will be deducted out of it, sir. So sorry. I think it will be deducted. That's
Yeah.
deducted.
Yes, it will be deducted for a lot of reasons, eh? And the one I like best is the cancellation part because it's supposed to net it off. Just like this one, what is it? This 80% part has actually netted off these net assets. So we need to actually cancel it out from here as well. And secondly, is the fact that is a cost to NCI. Is a cost to NCI. So which would have impacted on its value. Okay, is a cost to get this value. It's a cost to get this value. So it will have impacted on them seriously. So for that reason, it would be deducted from the value of the NCI. Now, when we have that, what would this come to then? 27 minus 11, that's 16. And what's 39,000 plus 69?
55,900.
55,900. So what's the global value of NCI now? Because we have a single value for NCI.
71,900.
71,900. Okay, now let's consolidate. PICO, consolidated statement of financial position, as at year ended 31st what? Is it December? March. 31st March 2017. Assets. Non-current assets. Okay. So what's the first item here? That's PP. Can you help me add these three together?
205,000, sir. 205,000.
205,000. Then secondly is investments. This has been cancelled out. They have all been cancelled out. And we're having a balance of how much?
12,000.
12,000 from that cancellation. Then we have current assets.
Yes, sir. 105,000. 105,000.
Okay, current asset is 105,000. So what's my total assets? What is the total?
322,000.
322,000. Now, my equity and liabilities. Now I have my ordinary share capital. So what's my ordinary share capital? This has been cancelled out. This 50,000 under ESCO cancelled out. This 50,000 under SSCO cancelled out. So whatever balance that is remaining is now NCI. So what we consolidate is just this 40,000. That's the uncancelled item. That's 40,000. Additionally, we have retained earnings here. So we have already done workings for this. And my consolidated retained earnings from what I have here is 165,000.
165,100.
Okay. 165, 100. Then after NCI, before I go to payables, I need to bring in non-controlling interests after consolidated retained earnings, because NCI is also part of our equity, is the uncancelled portion of the share capital and reserves. That's what we call NCI. I think that's workings 4, I guess. Yeah. And this workings 3. This workings 2. So how much is the NCI? 71,900. So what's my total equity? What's my total equity? So we're
277,000.
adding it together. Okay,
277,000.
277,000. Thank you very much. So my payables, 15 plus 17.5 plus 12.5. What does that come to?
45,000. 45,000.
45,000. So what's my total equity and liabilities?
22,000.
Now, is there any difference between this one and simple consolidation that I showed you earlier? Maybe yes. Is the difference material? No, it's not. It's substantially the same. If you look at it critically, it's substantially the same thing, considering the fact that you are canceling out and any uncancelled item consolidates. You are still doing the same thing here. So the only thing is that since there is a sub-subsidiary, the parent did not buy that sub-subsidiary directly. So you went through another route. So our holding in him should be from that route. We need to consider it from that angle. And that's why we need to start considering effective holding and all of that. And on the basis of that effective holding, we then determined how we want to cancel out and also our share in the retained earnings of that SSCO. However, we carefully analyzed the cancellation when we're determining this consideration transfer to ensure that when it comes to how much we paid in SSCO, we don't mistakenly go and do 48% of 55,000. That is absolutely wrong, because our holding in the guy that actually paid this 55,000 is 80%. So what we paid out of it is 44,000. And not forgetting the fact that the balance will be borne by NCI. The balance will be suffered by NCI. And that's it. Every other one is the same. It's just to make sure you lay out your foundation very well. In the exam, nobody will give you a question like this. This one, the examiner does not reckon with this at all. What you will need to do first is they will give you all of these standards you have been learning. You need to really work on that, and you would correctly adjust the accounts of the parent and the subsidiary. Then consolidation is just part of it, because there's really nothing special in cancellation. So now let's go to the second question, which is a little similar to what we have done, but there's a subtle difference between the two. Now, this other question is saying that the statement of financial position of PICO, ESCO, and SSCO on 31st March 2017 were as follows. So I was given the statement of the three companies, and I told that PICO acquired its shares in ESCO on 1st April 2014 when the reserves of ESCO stood at 20,000. And ESCO acquired its shares in SSCO on 1st April 2013 when the reserves of SSCO stood at 25,000. On 1st April 2014, the retained earnings of SSCO stood at 30,000. It is the group policy to measure non-controlling interest at acquisition at its proportionate share of the fair value of the subsidiary's net asset. We are required to prepare consolidated statement of financial position. Okay. So how is this different from what we solved earlier on? Okay, let me just solve it for you. So I will not just assume. Okay, Michael, can see your hand.
Sir, it seems that the subsidiary has acquired the SSCO before the PICO acquired ESCO. It seems ESCO has acquired SSCO before PICO acquired ESCO in the question, sir.
That's perfectly correct. That's the difference. That's the difference. So since we just bought ESCO in 2014, but ESCO has acquired its holding in SSCO since 2013. So what will now be the impact of that in our workings here? Do you know it, Michael?
I don't know, sir. So I'm waiting for you to do it, sir.
Before I'm gone. It's okay. Okay. Now let's do our calculations first. Let me see. Is there any changes in the acquisitions? 40 on 50, 30 on 50. So that means the group structure, the first thing I will always love you to identify clearly is that's group structure. Just like we have established here, it's important you identify it there as well. So PICO in ESCO, ESCO in SSCO. So this one, the date of acquisition here was 1st April 2014, and ESCO has acquired this one last year,
2013.
2013. Okay. So let's do our cancellation. So goodwill. I'm not sure Mr. Christopher is around. If he was around, he has asked me to expand my screen. So PICO in ESCO, PICO in SSCO. So what's the consideration transferred? Let me just start from there. So what did PICO paid for ESCO? It paid 60,000. What did PICO paid in SSCO?
55,000. 55,000.
Okay, ESCO paid 55,000 for SSCO, but the parents would incur 80% of that, which you already identified as 44,000. Then the non-controlling interest, and the non-controlling interest from here is measured at proportionate share. So we'll wait to determine my net asset acquired, which comprises my ordinary share capital. What's the ordinary share capital here? This 50,000 and this 50,000. This also 50,000. Pre-acquisition retained earnings. What's our pre-acquisition retained earnings when we acquired ESCO?
20,000.
20,000, sir.
20,000. What was our pre-acquisition retained earnings when we acquired SSCO?
25,000. 25.
30,000.
25,000. Okay, so
30,000. That's April
okay,
20.
sorry. The other one is 25, and this one is 30, sir. 25 and 30.
Which one are we choosing?
You're choosing 30,000. That's the one on April 1st.
Why?
Because that's a date of acquisition, 2014.
But subsidiary bought SSCO in 2013.
We are choosing 25,000, sir, because it was purchased. Yes, I mean, like you said, sir, it was purchased in 2013, sir. So we are choosing 25,000.
I would say
Hello, sir.
30.
Hello, sir.
Yes, Mr. Christopher.
At as when SSCO took over, no, what's the other one, self? ESCO.
Yes, sir.
Then SSCO was a parent company because the date of acquisition was earlier before the PICO took acquisition of both ESCO. So the date of 2014 is the date of acquisition. Hence, we take the retained earning of 30,000.
Okay. So, Michael, it seems you're on your own. Everybody's saying 30. I really want saying 25. So as it is now, yes, ESCO acquired SSCO in 2013, but we acquired ESCO in 2014. So we cannot use retained earnings of 25 because as at 2014, we don't even know ESCO. We don't even know, as at 2013, I mean, we don't know ESCO, we don't know SSCO, we don't know any of them.
Mm.
So this 25,000 is not acquisition date for us. So what acquisition date is for us is 2014. And the retained earnings of ESCO as of 2014 is the pre from from parent standpoint in terms of the pre-acquisition retained earnings of ESCO, and also from SSCO's retained earnings. The pre is this 30. The pre is this 30, which is retained earnings as at when we acquired ESCO. When ESCO became a member of the group, it can never be this 2013 because as at then, the parent does not know any of them. We knew them in 2014. And it's the retained earnings at that date that will constitute the pre. So Tintin was right. That's 30,000. So if I sum these two together, this is 70,000.
70,000, 80,000.
This is 80,000. So NCI in ESCO is 20%.
14,000. Okay, sorry.
Okay,
Of
14,000.
70,000. 14.
What about in SSCO? We didn't do effective holding. It's just the same thing here.
52%.
Let me just copy and paste it from there, since it's the same thing. Okay, so 52% times 80,000. So how much is that? Yeah, Michael, you can ask a question.
41,600. 41,600. This one. Sir, the question, sir. This effective this thing for the non-effective interest, for the non-controlling interest, the 80% for consideration transferred and 52%. I want to understand, sir, is that 52 is that 52%? Is it the voting right? I don't, because I don't, although I will still look at the class, I will still look at the video after the class. I might have more understanding if I watch again, but I'm just trying to understand, sir, why do we do 80% for the consideration transferred and the non-controlling interest itself, we are using 52%. Why 80% and 50 and this 52% is more than 100, sir? I need to.
Okay. Okay, I'll just have to repeat myself again. So this consideration transferred is how much the parent paid in ESCO, this 60,000. And this consideration transfer of 44,000 is how much the parent paid in SSCO, which is 80%, which is what we have in ESCO, times what ESCO paid. That is what we effectively has paid. That's why we're using 80%. Now, that explanation is quite different from NCI. The aim of NCI here is just to ascertain NCI value. It's just to ascertain the value of NCI. And NCI is based on proportionate share from this question. And in some cases, it can be at fair value where they will just give you the value of NCI. So for NCI, we did 20% because he has 20% holding in ESCO, which is 20% of 70,000. So we cannot do 20%. NCI does not have 20% in SSCO. NCI has 52% in SSCO. And this 52%, I already taught you how to determine it already, which is just the balancing figure, the easier way. And there's a longer route, which you should not even do, which comprises direct and indirect and all of that. It's not necessary. Don't do that in the exam. But what this does for us here is it helps us establish the value of the NCI, the value of the NCI in SSCO. If you are looking for the balance of this 80%, we would adjust it when we get to NCI, just like we adjusted it up here. The remaining, where is it? Yeah. The remaining 20% was actually adjusted. It goes to when we're getting the NCI value at the end of the day. But as far as this cancellation is concerned, okay, this the pattern we would follow based on the intention of each line item. This one is what we paid. And this is, okay, the value of NCI, just so that we have 100% in ESCO, we have the 100% value for each line item in SSCO. Then we compare it against the net asset acquired. So that's why we are using each of those items separately there. Okay. Now, when that is established,
No, sir. So can we just say that this 52, that 20 is
your line is breaking now.
what I'm trying to say is,
Can anyone hear clearly?
My line is breaking.
Hello, Tony.
with you, sir.
Can hear you now.
Okay. I'm trying to say that, does it now mean that the 20% that we just adjusted from the NCI, does it mean that indirectly it has been included in the 52%?
Yes,
Because
it is.
this is, it's a little bit convincing, and I don't want to cram this thing because of examination, cramming is not good. So I'm thinking maybe that 20% that's why we want to adjust it from, maybe I'm correct.
Yes, it is. It's actually included. Yeah, Tony, you're correct, because when I taught you last week, NCI has both direct and indirect holding in SSCO. The direct is the remaining 40%, while the indirect is 20% times 60%, which is 12%. So altogether we have 52%. That's the component of this. So direct 40, indirect 12, altogether gives us 52% for the two. So if you don't want to cram it, whether it's included or whether it is not included, I don't know how that actually aids your understanding, which is why I actually started from the beginning, understanding why this NCI is coming here in the first place. Ordinarily, if you want to do cancellation, NCI does not even have business here. The cancellation should be between what we paid against what we acquired. So NCI is coming here just to compare 100% against 100%. For ESCO is a little direct because the parents paid 60,000. Why the NCI? In this case, it's proportionate share. It's just the remaining 20% times the net asset acquired. In some other question, NCI can be measured at fair value. So you won't have to be doing all this 20% and all of that. They will just give you the value. I think we did an example last week of that. Again, for this one, since this is SSCO and we didn't buy SSCO directly, so that 55,000 payments, we would only suffer 80% of that because that is our holding in ESCO of this 55,000. Now, the only argument where you can be coming up for 20% is if we were doing 20% of 55,000. If we do approach, not 20% of 80,000. So if we're doing the argument I would have expected is for you to look at this thing deep down that, okay, what if we say, instead of bringing it down, what if you look at it that, okay, what if NCI, you say NCI, instead of just saying 52% of 80,000, what if we say, okay, NCI should suffer 20% of the remaining 55. We don't do that here because the intention of this line item is to get NCI value. Which is why this other one, this 20% of 55,000, you will go and deduct it when we ultimately want to get, okay, the global value of NCI. So even considering 20% at all and say that, okay, you don't want to climb it, that still shows that you still don't understand it. So the 20% should not even be on the 80,000. It has nothing to do with the 80,000. It should be probably because the essence why 80% is coming here in the first place is because ESCO paid SSCO directly. And since we are not, it's not ESCO that is consolidating, it is the parent that is consolidating. That's why we are considering 80%. Right? Now, this one should even be easier for you. For as far as NCI is concerned, it's NCI value, proportionate share. So an NCI value is 52% of SSCO. That's his holding in SSCO. And 52% of what? Of net asset acquired. 2% of 55,000, and there will be a problem. We said 52% of net asset acquired. So that clarifies it because that's the intention of this line item here, to get, okay, what's the NCI value in this guy? So that now we know what the parent paid and the value of, and how we are measuring NCI in our books. So we have considered the interest of the entire shareholders. Then we can then compare that with whatever it is that's the net assets acquired in this case. So that's what we're looking at. Okay, yeah. So that's what we're looking at. So there's really nothing to cram. Of course, you still need to practice. If you don't practice, you still forget. Whether you cram or not, you still forget eventually. So that's that for that. I'll give you time from now to Wednesday to actually try and solve these things yourself. Okay, then, and this really is the same. It's like this always. So it's not like we have plenty. It's like they just know this, and you really don't have problem. And when it comes to consolidation, the least of your worry is this. This is the least of your worry. ICAN is least concerned about all this because they believe it's straightforward. The more worry you have is how to adjust those accounting standards in each of these, in retained earnings, in all of those items like that. That would be the major work for us anyways. Okay, so that's it again. So Michael, I can see your hand again. Please go ahead.
Sir, yes, you said you already said is the list of the world. So, but I just want to say this, sir. You know, last week you put us through this. You just do a sketch work. You told us, you know, that is holding in a subsidiary. You just do a sketch work that 80% times the holding in the subsidiary, we get the holding in the subsidiary. Can you use that to explain this 80% and 52%? I think it will throw more light on how we will deal with this. Although you have explained, and I don't know if the other people understand the explanation, but in my own part, I think it will still be like a cram work or something, because this thing I don't really get it. But if you can use that other way, it has a way you explained it last week. A subsidiary, a parent is having 80% in a subsidiary, and the subsidiary is having 50%, 60% in the subsidiary. We now use 80 times 60 times. It has a way you show us, which I think I understand that way. So if you can use that to understand, to explain this, sir, I want to see if we still get the same thing, sir. Thank you, sir.
No, I'm not going to use that way. Apparently, you haven't revised it. That's why you're saying I should be using that way again, when I've already done that already. How did you think we got this 48% and 52% here? And I've even broken down this 52% into 40% at 12%. And I've further explained to you that this consideration transferred is how much the parent paid in ESCO and how much he effectively paid in SSCO. And I've told you that the intention of this one is the value of NCI that I want to know, and it's not comparable to this. So, and I've told you this 20% holding in 75. This one is straightforward. The NCI effective holding in SSCO is also 82%. So if you don't understand it now, if you have to cram, then cram it. Then over time, maybe you understand it later, but that means you have not even revised what we actually did last week. If you can't see that, what I did here is what I explained last week already. Then go and watch that video again so that you understand it. We are wasting time on the least important.
Okay, sir. All right. Thank you, sir.
Let's move to the third one, which is consolidated retained earnings. So we have PICO, NESCO, and SSCO. Now, as per our question, this is 97,500.
Okay, 85,000, sir.
And this
The
is
next 85,000.
Okay. And SSCO is?
And the next one, 57,500. 57,500.
Then with the third pre-acquisition retained earnings. Okay. That is already determined up here. This is 20,000 here. And this is 30,000 here. And what's the post? 65,000. And how much is this? 27,500.
27,500.
Now the group share in ESCO and SSCO. In ESCO, the group has 80%. 80% of 65,000, which is the post-acquisition retained earnings.
52,000.
How much?
52,000.
And in SSCO, the parent has 48% of 27,500.
13,200. The total is 162,700. 162,700.
162,700. And non-controlling interests, we have ESCO and also in SSCO. So the value of our NCI, so we just pick it from here. The aim of this is just to get value of, like I keep saying, because we don't actually cancel out this. We actually consolidate it because it's an uncancelled out portion. The only essence why you are setting it up this way is just to compare 100 with 100, not necessarily to, if you understand it that way, to help you a lot. And when we move to other areas, you'll be able to apply it better, that NCI is not cancelled out. So don't expect that this one will now jive against this. No, it won't. So we said NCI is 14,000. And here is how much?
41,600.
So NCI share in post-acquisition retained earnings. In ESCO, SCI has how many percent? That's 20%. Of how much? Of 65,000. What would that give us?
13,000.
And in SSCO, NCI has how many percent? That's 52%. Times how much? 27.5. What would that give us?
14,300. 14,300.
Then cost of investment. So what did we incur? That is when that balance can then come. Times with 5,000. And we said it's 11,000.
11,000. Yes.
So how much?
16,000.
16.
16,000. Yes, sir. 16.
What about this one?
55,900.
55,900.
Okay, so that's the whole of the workings for this. Almost the same thing as what we did before. The only difference was the fact that, which is very important, for SSCO, I was given the retained earnings before we acquired even his own parents, because the ESCO has acquired SSCO before we acquired him, before we acquired ESCO. So they now give us the retained earnings of that SSCO as at that date ESCO acquired him. Luckily for us, they also give us retained earnings of SSCO when we acquired ESCO. So, and that's the relevant retained earnings to use. That's the pre-acquisition retained earnings from the group perspective. And that's the only difference between this and the previous one that we have done before now. Every other thing is actually same. So now I think you can ask more questions now. So PICO, consolidated statement of financial position, I think March 2017. Is it? Yeah, 31st March 2017. So we have assets, non-current assets. So what's the first item here? That's PP.
PPE,
Okay, so can you add these three together?
205,000.
205.
Yes, sir. 205,000. Yes.
Then the next item is investments,
Goodwill.
and this has been cancelled out. So leaving to goodwill of 9,600. So what's the others? These current assets. What's the addition of these three?
Current assets.
105,000.
Sorry?
105,000. 105. 105,000.
105,000. And what's my total assets? How much?
319,600. 319,600.
600.
Equity. What's my ordinary share capital?
40,000.
That of the parent, because this has been cancelled out. This has been cancelled out. That's 40,000. Then consolidated retained earnings. How much? Working 3. 162,700. Plus 3. 162,700.
Then if payables, 45,000.
No, don't let us forget with consolidated non-controlling interest,
Okay, NCI. Oh, okay.
which is workings 4. How much was that? We didn't add the two together. What's the addition of the two?
71,900.
1,900.
71,900.
71,900.
Then if payables, 45,000.
No, okay. Payables for 5,000. But I like to
45.
add this. Let me add this 3. Let me add, give me figure for equity. 40 plus 162 plus 71.
274,
74,
600.
600.
Okay.
319, 600. 319, 600.
All right. Okay. Now, so again, this is just so different with, this is also the same with what we have been doing before. So on the final note, buttress my explanation again, so that I will not be spending valuable time on this line item that is the least of your worry. I can, in fact, from this, just that this is how we decide to set it up. And I've been telling you that this line item here is nothing, because I can decide to even remove it entirely and I will still get my balance. I will still get this same this same value. The only reason why this is here is just to compare 100% with 100%. If I remove, let's assume I remove this one, and I remove this becomes 100. So that means since this is 80% and this is my holding in this guy is, I think, 48%. If I do 80% of 70,000, what would that give me? Don't do this in,
56,000.
yes. So you get 56,000. If you compare 56,000 to 60,000, what would that give us? That's 4,000.
4,000. 4,000, yes.
This 80,000 here, the parent has 40. This 44,000 that the parent paid is to get 48% in SS school. So if you do 48% of 80, what will it give you?
38,400.
Okay, minus 44,000.
5,600.
So, like I keep telling you, this NCI here is just to compare 100 to 100. So don't let what is insignificant, don't focus on what is not important. So I can decide to follow that route, but this route helps us. It makes everything clear. It shows us the entire picture. It has no impact on goodwill at all. It has zero impact, which is why I took you through those revisions that day and all of that. It has zero impact. The only instance where you find NCI having impact on goodwill is where the examiner gives you the NCI figure, or they tell you that NCI is measured at fair value. That is when it can be having a share. Even at that, whether it has a share, whether it doesn't matter. Your goodwill, you put it in, you consolidate it after cancellation. So again, what is important, what you need to understand is this. This has to make sense to you. This 80% of 55, that okay, subsidiary paid 55,000. And we are considering, okay, we want to consolidate PICO. So how much out of the 55, what's the cost of PICO here? It's 80% of that. So this one now saying, it is 52. Well, this one should even be very clear, because like I keep saying, it's NCI value. You say no, you should. This NCI value and its value in SS code is 52%, which will net off against this is 52% here. Is in and out. Like I said, we have more serious things than all of this, but it's important because it's long. Look at how long it's taking us to do all of these things. So you need to get used to it. At least you'll be picking point from these workings. You might be required, in fact, you will be required to do it in the exam. So you have to take your time, sit down, solve it yourself, and get used to it. Then the consolidation, of course. Now let's solve, what's time? Okay, let's solve one more, this third one. Now for this third one, it's not so different, but now they just added some additional sugar for you guys. So statement of financial position of PICO, ESCO, and SSCO on 34 December 2017 were as follows. So PICO, ESCO, SSCO. So they give us statement of financial position for the three of them. Now, the major thing here is the cancellation, and I can see these investments. In this case now, PICO acquired shares in ESCO. He paid 45. Now he himself he now bought some shares in also in SSCO. He also bought some shares in SSCO now. And in addition to that, ESCO then also bought in SSCO, which is 21,000. So, and that's the major thing here. Now, they now give us the holdings. Here, they decided to give us all the holdings. So they say PICO acquired 60% in ESCO on 1st January, when the retained earnings of ESCO was 4,000. PICO also acquired 20% of SSCO and ESCO. Okay, and ESCO also acquired 60% in SSCO on 1st January 2005, when its retained earnings was 75. And after that is the good policy to measure NCR at acquisition at proportionate share, subsidiaries net asset. We're now asked to prepare consolidated account as at December. Okay. So let me establish the group structure here. And the group structure is that PICO acquired holding. PICO acquired holding in SSCO. The examiner already told us the percentage holding, I think 60%. I think he acquired 60%. Yeah. He acquired 60% in ESCO. While ESCO then acquired how many percent now?
50% of SSCO. 60%.
60%. 60% again. In SSCO. Okay. Then what again? PICO also acquired
PICO acquired 20% of SSCO.
Okay. So PICO. Okay. PICO acquired 20% in SSCO. Okay. So this is the group structure. In the exam, it should be faster for you to draw like that. So, and the date of acquisition, you have to note it, so that you will know which pre-acquisition you are going to use. The aim of the date of acquisition is just to know, okay, what's the retained earnings at acquisition? And this is 1st January, it was for when they acquired SSCO, it was 1st January 2015, and it was
1st
75.
January 2014.
Yeah. Okay. So, and it's a little straightforward in this case. So now let's then move to the cancellation. PICO in ESCO and PICO in SSCO. This cancellation will usually result in goodwill, PICO in ESCO, and PICO in SSCO. So again, want to cancel out. That's what we're doing here. Consideration transferred. How much did PICO paid to acquire ESCO? It paid 45,000. So acquire ESCO. How much did Pico paid to acquire? So there was one he bought directly, the 20%.
Yeah, that is 12.5.
And he paid
20% is 12.5.
Okay, 312.5. And the indirect, who is holding in
21,000.
So, which is
21,000.
60%.
21,000.
That's 60% times 21,000, Abi. 60% times 21,000. So how much is that?
12,600. Instead of
So,
21,000, you wrote 12,000, sir. 60% of 12,000. Can you change that,
oh,
sir?
okay. Yes. So so that's 12.6. Again, value of NCI is at proportionate share, so I wait. Let me do my net asset acquired. What's the ordinary share capital of ESCO? 25. Okay. 25. Then pre-acquisition retained earnings. ESCO 4,000, SSCO 75. 4,000 75. So what's the addition of this? This 29,000.
29,000.
How about this? This is 32,500. So NCI in ESCO, it has 40%. That's 40% times 29,000. How much is that?
11,600. 11,600.
11,600. What's NCI holding in SSCO? Who can tell me?
36%, sir.
Okay, Chineye. So let's confirm that. First, effective interest of PICO, in SSCO. Yes, direct of 20%, which is this 20% direct. And it has indirect of 60% times 60%, which is 36%. So together, the parent has 56% in, so the balance non-controlling interest is 44%, then the addition gives you 100%. So Chine, you're wrong. It's actually 44%. You see, this 44%, you don't need this at all in the exam. Also comprises of direct and indirect. The direct is 20. And how did I get the 20? Since parent has 20% direct, okay, in NCI, in SSCO, and ESCO has 60% in SSCO. So the remaining 20% belongs to NCI. The indirect is as a result of his holding in ESCO, and he has 40% in ESCO. So 40% of whatever ESCO has, which is 60%, and that's 24%. So if you add 24 plus 20, it gives you 44%.
44.
Again, don't bother yourself doing all of this. It's so irrelevant. This one is just for you to shall understand. As soon as you get this one, balancing figure is this, and you move on to important things. Don't start doing all of this. To give you 0 mark the exam. Even all of these calculations self, nobody will give you any mark for it. So if you can just use your eyes to look at it and compute what you want to compute and move on, it's good. But I believe this, for you to do this, should not take you a minute. As soon as you're able to establish your structure. So having identified that, the NCI holding in SSCO is simply 44% from what we computed up here times 32,500. And how much is that?
14,300.
14,300.
Okay, so let's sum them together. Help me sum 45 plus 11,000.
56,600.
Okay, let me sum these three together.
39,400.
Okay, now let's get the differences. What's 56,600 minus 29, and this as well.
27,600. 56,600 minus 29, 27,600.
What about this?
6,900.
What was the addition of these two?
34,500. 34,500.
34,500. So again, if I decide to remove this NCI, and I just, because what I'm canceling out, NCI is not even involved in the cancellation at all because I don't cancel it out. I can just focus on this alone, and I cancel it out against my holding in this. But to avoid all of that, we just, okay, let's include this guy. It paints a better picture, which is why we use this approach to determine our goodwill, and it's also the approach recommended by IFRS 10. That's like, okay, let's net off 100 against 100 to determine our NCI, to determine our goodwill. It doesn't impact our goodwill, whether we include it or not at all. So the third one is consolidated retained earnings. So we are looking at PICO, we are looking at ESCO, and we are looking at SSCO. As per question, what were our retained earnings? 16,12,5. 16,12,5. Oh, I didn't note this one. What's PICO's retained earnings? Who noted it?
22,500.
22,500. So you remove pre-acquisition retained earnings, which we computed up there. This 4,000 and this 75.
75.
So this will give me 12,000. This should give me
5,000.
5,000.
5,000.
So group share in ESCO and SSCO. So how many percent do we have in ESCO? 60% times 12.
60%.
So how much is that?
7,200.
How much do we have in SSCO? The parent has 56.
56%.
2,800.
5,000.
2,800.
2,800. Okay. 2,800 and 7,000.
Addition of what? 32,500.
Crochet.
Okay. Now, I need to, this evaluation surplus, I need to do the workings as well because this 10,000 needs to be shared between the parent and NCI. Just so that I set it up properly. So what are we consolidated? So Pico 25, this is 10. So the group share is 60% times 10. That's 6,000.
1,000.
Then
31,000.
yes, 31,000. Then non-controlling interest in ESCO and in SSCO. So value of NCI, this is 11,600, this is 14,300. 11,600, 14,300. NCI share in retained earnings. In ESCO, we have 40% times what? Times 12,000. What does that give us?
4,800.
In SSCO, we have 44%. I think it's times 5,000. Yeah.
2,200.
Then NCI share in evaluation surplus, yearly as in ESCO, which is 40% times 10,000.
4,000. 4,000 naira.
Then my cost of investment in SSCO, so which is 40% times, how much did they pay? This guy pays 60, he will pay 40. of 21,000 ESCO paid. And how much is that?
8,400.
Should be an outflow. So let's sum it together.
20.
How much?
12,000. 12,000. 12,000.
What's the addition of these two?
28,500.
Thank you. So let's consolidate. When is the period of concern? December.
PPE.
Okay, how much is the PPE?
105,000.
How about goodwill?
Goodwill. I'm not writing it down. We need to go.
34,500.
Okay, 24,500. Then my current assets. What's the addition of all this?
65,000.
So what's my total assets?
204,500.
Then what's my equity and liabilities?
Ordinary share 50,000, sir. 50,000.
Okay. What's my consolidated?
Revaluation surplus. Okay,
I'll get
retain
that.
earnings.
Yeah. 32,500. Consolidated
Revaluation
evaluation.
surplus.
How much?
31,000.
It's 1,000. Then what's my NCI?
28,500.
So what's the addition of all this?
142,000.
Then what again?
12% loan.
How much?
5,000.
See, that one is under non-current liabilities. How much is the current liabilities?
57,500.
57,500. So what's the addition about this?
204,500.
Okay, so I will stop here for today. Do yourself well to practice all this. There is nothing special here. There is nothing special here. And please don't start looking for what is not missing by asking questions on this that is very, very insignificant. It's just to have a 100% picture. It has no relationship with this. They're different. Yeah, reasons for being here is different. This one is for cancellation. This one is just to make up 100%. It cancels out against net asset acquire. Is in and out. It has no impact at all. All this is the real thing you need to understand here. So understand it very well. Next week, there will be a little change in our class because I'm also taking case study. We're going to be starting our case study from Sunday next week. And it's going to go on to the end of the diet. So our classes will start an hour earlier. We are supposed to start to 30. I push it to 3 to 5 is it. But from next week, our classes will be from 1:30 to 3:30 from next week. That's because of, a lot of things will be happening on case study. So hours will come from, I think you finish audit 1. So after your audit class, 30 minutes after, we'll start our SBR. So you know that you are done with SBR for the week. And our Wednesday class remains. So next week, we'll be stepping a little further, teaching you these consolidation principles. So we're going to be looking at acquisition, business combination in stages. I'll just teach you the core principles because this principle is the principle. You learn it, you move forward. And if you understand it fast enough, then we will be able to progress into disposal. So my aim is to be able to cover the principles in 1 hour, then so that we know that upper week will be tackling. So next week we should finish all of that. From the one we do on Saturday and the one we do on Wednesday, finish that. Then the next week after then, we would finish foreign subsidiary and cash flows. Then we'll then solve past questions and we'll continue to solve past questions because you're number 1 in your exam. Solve as many as possible. You can solve everything, solve everything. If you can solve 10 diets, solve 10 diets. Depends on you. But I will solve most of it for you here. So after that one, we have just 3 things I want to teach you. I have sustainability reporting. It's come out in your exam, no doubt. Everywhere, you find it everywhere. I have ratio, I have EPS. Those are the 3 things I have left. And our final class we used to do on Sunday is going to happen tomorrow. After tomorrow, no more that Sunday class we do. Tomorrow is the final day. And we're going to be doing that from worst case 10:30. We'll start from 10:30. Then we'll finish it within 2 hours or less, we're done. What I want to cover is I didn't finish investment property because of the glitch I had. We're going to finish investment property. Then I would also look at borrowing costs. That one is very short. Then I also look at government grants. That one is also very short. So with that, you have covered so much. And you're still going to learn a lot in October towards your exam. We hope to finish in the next 4 weeks because that's how long we have left in the next 4 weeks. So we have 8 more meetings to finish the syllabus. That's more than enough for me to finish up everything you have, even plus interest self. Teach you even much more than you require. But the bulk is in hints on your table. You need to revise, solve, and solve, and solve. I have some of you that's making a lot of effort, sending assignments and all of that. If for anything, I might even be the one slowing them down if I don't respond on time, but try my best as possible to respond to those doing assignments. So I'll see you guys next week. No, not next week. I'll see you guys tomorrow. Have a good one. Bye.